I just want to get a sense, because there's a one-off when it comes to margins with respect to where watches are concerned, which has around an impact of 400 basis points and 50 basis points with regards to where gold sales is concerned. Just want to understand what is this impact exactly, and when does it reverse going forward? How many quarters does it take? And then overall, how will that impact blended margins for FY26?
Okay, thank you, Mahima, for having me, and good morning to your viewers. Yes, we did speak about it yesterday that in this quarter, our profitability had a one-time benefit of about 100 crore, equally distributed between jewelry division and watch division. In watches, we run inventory standard cost valuation once in a year, and that typically happens in June. And this time, because of their premium Nebula watches volume also going up, gold prices going up, material cost and labor cost all going up, there has been a significant impact of that. And this impact, which is about 400 basis point on this quarter's margin, is likely to reverse over the next 2 quarters, considering inventory turn of about next 2 to 3 quarters, it will reverse. So I fully FY26, it should kind of flushed out of our P&L. And I believe that watch division, with the growth trajectory it has and extremely well analog performance, mid-teen margin overall basis, they should certainly deliver for FY26.
For overall blended margins for Titan as a whole?
The Titan as a whole, this overall, if you see this quarter, this both put together was about 75 basis point impact, so it's
okay.
Overall Titan wise, it's not that. In jewelry, the 50 basis point came again. We have a lot of hedges on our books, and because of the gold price volatility and other financial global issues, there has been volatility and MTM gain came. So as these forwards and futures are settled in next 2 quarters, that would also kind of reverse. So these are the two one-timer which are likely to reverse in Q2, Q3 mostly. But overall margin performance was quite satisfying.
Fair enough. Got your point. In terms of buyer growth, I have two different questions with regards to where buyer growth is concerned. It was flat, largely on account of high gold prices. But the thing that you mentioned in con call was that you've seen higher buyer growth in terms of where studded jewelry is concerned. But in terms of the overall product mix, because studded mix is still lower, it's impacting the margins overall. So one thing that I want to understand in terms of how demand is looking like, because what are buyers going ahead and buying, and if you're seeing higher buyer growth in studded mix, do you think that going forward the mix will improve and then have a positive impact on the margins?
Sometimes this is becoming very difficult, but we always track buyer growth very closely, because that's the matrix which gives us confidence that sentiment is strong and people are coming out and making purchase, and that's in a way for us volume indicator of the business.
Correct.
Gold high prices are keeping people, at least the buyer growth is very, very muted and sometimes a very small negative buyer. So it is all ticket led growth on the gold price happening. Studded also, what we are finding, sub 1 lakh is growing well, and high price points are growing well. It is in between, we find a little bit lack of sentiment, which is happening. Overall, while gold remains strong as an adornment and investment option for the buyers, but yeah, more and it is the same buyers, or no new buyers are coming in, or they are making purchases only when they are kind of like wedding-led purchases, etc. Otherwise, people are trying to defer their purchases sometime. Overall volume for the industry has also come down. So we will have to wait and watch about how the gold price volatility kinds of settles down, which is not happening because the whole global environment at this point of time keeps the financial market, commodity markets on kind of turmoil. Yeah.
Understood. Okay. In terms of the higher base impact that you've also mentioned that will have on Q2 because of custom duty reduction, that I think we should be also carried forward to Q3 as well. Just want to understand as to overall what is the kind of growth that you're penciling in for FY26, considering everything that's happened.
So, of course, Titan performance, financial performance is dominated with the performance of jewelry division.
Correct.
But the good part is that if you look at our quarterly result, all businesses have done exceedingly well. Subsidiaries have done exceedingly well. International operations have done exceedingly well. And jewelry with its own challenges of gold prices, high base, still we believe mid-teen growth rate is definitely possible, So overall, Titan company, mid-teen to high-teen growth rate for the full year, we are still aspiring for, we are targeting, and we are quite hopeful to achieve that.
Okay, Mr. Sonthalia, in terms of your Damas acquisitions, I wanted clarity on one thing. Does the acquisition mean that you might also bring at some given point of time Damas in India, first thing? And correct me if I'm wrong here, Damas also has exposure to lab-grown diamonds in certain stores. Does this mean that, this marks the entry of Titan into lab-grown diamond space?
Yeah, indirectly, yes, you are right that Damas we are entering into. But the strategy of Damas acquisition is very clear in our mind, at least on some of the aspects. One aspect is that Damas is a very strong GCC brand, Arab brand. For Arab customer, it resonates very well. So we would like Damas brand to continue to sharpen and focus on Arab customers through their network, etc., and collections. And from that point of view, it doesn't make sense for us to bring Damas into India. And Tanishq as a brand or other Titan brands will continue to focus on Indian diaspora and Southeast Asian. For Tanishq to get into Arab customers is not possible, and that is what we concluded. So I don't see a possibility of Damas, or at least in our thinking, it is not making sense to us to bring it to Indian market.
Okay, fair enough. That makes sense. And in terms of the entire acquisition, from a longer term perspective, I want to understand that once the entire acquisition is completed, synergies are completely in. What is the kind of growth that you're expecting from the acquisition, the kind of top line growth that you would expect, let's say in the next 5 odd years from, because this marks your presence in a big way in the entire Middle East space.
Right. A bit early, Mahima, to kind of give a clear guidance on that. We are devoting our time, first of all, on the closure of the transaction, where a lot of approvals are needed. And then, of course, the next 6 to 8 months is in a way repivoting the whole thing the way I described, that more Arab focused brand, and kind of retracing back whatever they were doing for Southeast Asian. And so all those restructuring would take, to my mind, around 12 to 18 months, and then it should get into a growth trajectory. Right now also it's Arab's signature, they call it the signature network, that's growing at double digit, low double digit kind of thing. So, and sometime high single digit. Those markets are like that, from the growth rate point of view. So from that context, it's growing well, but we want to sharpen it over next 8 to 12 months, and then we definitely believe that a good double digit growth this asset should also start delivering.